Sylvia's Traders Lounge, in partnership with Scope Markets, welcome you to yet another webinar where we learn, trade, and profit. We shall be giving you trading insights on technical analysis, fundamental analysis, risk management, and trading psychology. Today's guest is Linda Raschke, and our theme is longevity in trading.
Welcome, Linda. Thank you for showing up to the show. I'm going to read out your bio and then we will get right started into the questions. Linda began her professional trading career in 1981, making markets in options as a member of 2 exchanges. She became a registered CTA, that is a commodity trading advisor, in 1992. Since then, she has been the principal trader for several hedge funds and started her own hedge fund in 2002, for which she was the CPO, that is a commodity pool operator. Linda's hedge fund was ranked 17th out of 4,500 for the best 5-year performance by Barclays Hedge, and her early successes were recognized by Jack Schwager in his renowned Market Wizard series. Linda retired as a CPO and CTA in 2015. However, she continues to trade daily for her own account, the same managed money program she had traded since 1992. In the world of professional trading and money management, Linda Raschke stands out from the crowd for 3 factors. Those are performance, longevity, and consistency. Sylvia's Traders Lounge previously interviewed Linda early on in 2019 with a key focus on her latest publication, Trading Sardines. Trading Sardines was released in January 2019 by Daughters Press and is available on Linda's website. An astounding 45% of book sales have been international. And so today we will be having Linda, and our theme will be longevity in trading. Welcome aboard, Linda. Briefly talk to us about your history in trading. With 40 years of trading experience, what your trading looks like today when you're trading at home, what are your routines like, as a full-time trader, and where does your edge lie when it comes to trading in the financial markets?
I was just saying, the trend following is something that's glorified on the internet, but if you were to do it on a strictly mechanical basis, I promise that none of you would make money. It's because it's a very choppy approach if you did it on a mechanical basis, and you'll have some big wins, but you will also have some long drawdown periods.
All right, so your edge basically lies with the volatility breakout systems.
No, it's the system itself is a very challenging thing to trade. You have to understand this. So I'm not advising that you do it on a mechanical basis, because if it were so easy, everybody would do it, right? But it doesn't work that way. So I think that your edge is understanding the power of that supply-demand imbalance when it does unfold. See, so the volatility breakout is just simply a range expansion function. And if you're familiar with names like Toby Crabell or Larry Williams, or a lot of these people created systems that you could trade 30 years ago. It's just that it doesn't hold up over time now. It's a very, it's a very intensive thing to do, and the edge is very, very small now because there's so much slippage. But I think that as a trader, what I'm trying to say is you have to understand the power of that short-term supply-demand imbalance. And that's what takes a lot of patience waiting for and a lot of experience to recognize. And when you do start to see that train leaving the station, to be cliche there, you have to understand how to hop on board.
All right. Understood. Maybe briefly just take us through your decision-making process, and because I know it's relatively quite easy to understand and simple from your perspective, and if you can illustrate, how you actually take your trades, that would be great.
Well, it all comes from doing my preparation the night before, and what I'm looking for is there a way that I can determine the bias for the next day? So I'm only trying to evaluate the next day. I'm not trying to evaluate where a particular market will be a week from now or a month from now. I'm trying to take it one day at a time, because you well know that you could have alongside bias on the euro currency, and it could go up 2 days, but then it could go down one day. So I want to evaluate, is there a way that I can determine that this market should have a low to high bias or a high to low bias? You see, for the day, I'm just concerned with, is there a trend for the day? And if I do my preparation ahead of time, I mean, there's certain pattern recognition that you can do. I've done a lot of YouTube videos that you can all go watch, for free on my YouTube channel, and it'll show you some of the things, technical conditions that I look at. I'm not looking at fundamentals. I don't look at news. I'm just looking at pure price. This is the technical action, and saying, can I catch a piece of this, for the day? But it's not going to be a mechanical system. When I do my modeling, it's just to see, oh, okay, this won 60% of the time, and if I bought on the opening and sold on the next day's opening, or if I bought on the close and sold on the next day close. That's how I do that type of modeling. For our own trading, if you are starting out, or even if you've been trading for a while and you start to stumble or get caught in a rut or have emotional, experience, then if you go back to the record keeping and the writing down numbers and so forth, it's a way of controlling that. See, it's just like you're playing cards, like blackjack or poker, and you're counting in your head the statistics, and then it keeps you from getting less anxious. Like, oh, I just lost that last hand. I just lost, this big chunk of money on that last hand. And instead, you're keeping the statistics and counting the cards in your head. It keeps you focused just on always going forward. So for me, I don't do any journaling where I'm looking at, all my trade statistics, win-loss ratio and stuff like that. Even though, like, in the very beginning, I did just basic stuff, looking at the win-loss for the models and how I was trading with the models. But like for me, I only have so much time in the day, and I also don't like to look at things that are going to make me anxious. I mean, if I study a bad trade, it's going to make me feel depressed and bad, right? I know what much we're better at engaging in one task only at a time. You'd go out and you'd garden, or you'd go out and you'd practice the piano, or you'd go out and do one thing. And now people have gotten very used to this multitasking, the Twitter, the tweets, the stuff on your cell phone, the internet, the surfing, the email. And every time you do that, you are disrupting the brain's focus. So it's like a grand chess master, and he has the whole chessboard, in his head and his mind, but he's like, oh wait, I gotta go answer this email or things. You're constantly interrupting that clip, because that's tough for people to do more than that. It's easy for you to shut the door on your room that you're in, don't let the dog in, B, make sure you've got your coffee, C, check your phone into the other room so you don't have it right there as a distraction. In Philadelphia, I was in California first, and then I moved to Philadelphia, Pennsylvania, and was on the exchange there. I had another backer, and same thing. He would be in that office before anybody else, and he would be the last person to leave. And I would see how he did his homework, And his preparation, he never took me and said, oh, now this is what I do, and here, look for this pattern. That never happened, you know. But, you know, in terms of having a mentor, it's all about the habits. See, that's what people overlook. They think it's about a particular pattern or a particular trading strategy, and that has nothing to do with it. It's all about your habits, your preparation, your homework, these kinds of things. That's about the most that a good mentor can do for you. They can start you off maybe pointing out, you know, some technical strategy, but it's you're not going to make money until you've made it your own.
All right, Linda. Thank you for sharing that. And another thing, guys, I want to mention is that Linda is also a chartered market technician. I believe so, right?
I'm actually not. You know, I joined the MTA back in 19, I don't know, it was maybe 88 or 89, and I actually was on the board for a while there. I stopped being part of that organization maybe 15 years ago. I never did all that CMT test and stuff. You know, I think for me, it wasn't important. You know, maybe if you are going to get an institutional job, you know, but you can really learn on your, you know, on your own the basics. I really believe in Wyckoff and, you know, Schabacher, who was the father of the chart formations, and you know, any book that was written 100 years ago, or even 50 years ago, before you had computers, I think, you know, has a tremendous amount of value. So, and I don't always agree with all the content that they do on these, you know, chartered market technician, or actually IFTA also is a very fine organization, the International Federation of Technical Analysis. They are a fine organization. And it's great because it exposes you to new ideas. Maybe a program like that opens your eyes to other areas of study that you didn't know about, you know, with the technicals or different markets. So it's all good, but I'm uh, the markets are my teacher.
Okay.
Linda, you were talking about habits before. What can you say about the power of replacing bad habits with good habits when it comes to how habits control, you know, the way traders act, and how have you been able to achieve that yourself?
I'm still working on it 40 years later. um, you're right. You can't ever get rid of a bad habit. Like once you have a bad habit, you can't eliminate it. All you can do is modify it or try and replace it. So, you know, if you have a bad habit of over trading with your hand on the mouse, I have to substitute something else, you know. So instead of my hand on the mouse, maybe I have to have, you know, something else to fiddle with, or go through a process of writing things down. I have to do another activity instead of that bad habit. And so then people end up being so harsh on themselves, you know, and thinking negatively of themselves. Oh, I did that wrong again. What's wrong with me? I have no discipline. And you can't be that way, you see? So it's something that we're human and you'll always have to work on. So two things, think about A, replacing it with another activity, and B, a second very helpful thing for you as a trader is to have a buddy. Okay, so even though it's important you do your own analysis and your own trading, if you have a trading buddy, and I think it's like if you keep it small, you can't have a group of 20 people. There's just too much noise and conflicting ways of looking at the market. But if you just have a trading buddy, sometimes A, that's a very calming thing. B, You know, it's somebody that you can bounce ideas off and see. If you knew that somebody else was looking at your statements or your trades at the end of every day, I promise you that you wouldn't be nearly as likely to make so many bad habits, okay, or bad trades. If you're left by yourself, okay, you know, you will tend to it'll be much harder for you to get rid of those bad habits and trades. So for example, when I had my hedge fund, I had clients that most of my clients were large funds. So they're called fund of funds. They would have a large pool of money, and then they would allocate to say 10 different types of styles to try and get a smoothing, you know, a blend, and you know, so I knew that there were eyes at the end of every day checking my positions, looking at my statements, looking at my exposures. You know, they might have $20 million with me. So that keeps you on your toes. You know, you're not going to be as, you know, as sloppy if you know somebody else is seeing your statement. So, you know, you guys have a good group there. I can see you guys. You all have a great support community amongst you, but maybe there's a way that one or two of you can pair up with each other and make a commitment to share your trades or your statements at the end of each day, or, you know, that type of thing. And so that's a good solution as well.
Do you ever think there's a member of the group who's asking about, you know, what makes you pull the trigger or make that trade? And what's the last thing that you look for? That's Lawrence Derito.
Yeah, that's a good question because everybody is going to have a tendency to overtrade, right? They'll click too many times, or there'll be a hesitation and a fear to pull the trigger. It's not like anybody's just like got the perfect balance. So most people are going to be likely, you know, prone to clicking too many times and too happy to, you know, like an addiction, or you're going to be hesitant and fearful and less confident. And for me, I have spent a lot of time reading, you know, watching the price action, and I know what I'm looking for. I want to see, I want to follow the price and see it test a level and then start to come back up. And, you know, and then I know, okay, this is acting in accordance with my plan, with my bias. And then a lot of times I just buy at the market because I know I'm right at that turning point and I don't want to miss it. But you know, it takes practice. You don't want to be buying too soon when it's still coming down, and you want to make sure it's against a support level. So a lot of times I will just do that, you know, enter at the market, and that's very much from, if you read that book, The Tailored Trading Technique, you know, a lot of big traders, you know, in the past, you know, were tape readers, right? You know, Jesse Livermore, these people, they're watching the price action, and then when they feel like they've got a handle on that market, they know it's according to their plans, they go in and they put on the trade, and you don't want to miss it, okay? And it doesn't always work out. Then you have to immediately manage the trade, and you might end up having to try 2 or 3 times. So that's one style. I have another friend who likes to trade off of the charts. He'll look at, say, for example, a 5-minute candlestick chart, you know, and then he'll look to put a buy stop, you know, above the high of a bar and let the market pull him in. I don't do that. I'd rather be trying to, you know, buy right after it's just made its low ticks and it's starting to come back up. So everybody has a different style. My style is very much, I know when I'm right, the market's acting the way I'm looking at. I usually start to focus in very closely when it's at a level, all right, when it's at a level that I have been looking for. You know, it could be you're watching the price pull back to a moving average, or you're watching the price, how does it go up and test the previous day's high? you know, there's always a level that you have that you can be watching the price action against. So if I see it approach that level and find support or resistance, then I'm going to go in and make my trade. And I'll watch it a little bit more closely at those moments.
All right, Linda. Maybe now, as we conclude, you can talk briefly about your book. And last time I checked, it was available on your website, and also where people can go to find your work, your YouTube channel, and the likes.
Yeah, I think I've done like maybe 70 YouTube webinars or whatever you want to call them, presentations over the last, I don't know, 20, 15 years. And they're all there for free. I mean, uh, you know, on my YouTube channel. So that's a lot to watch. The book is more, I wanted to write something that it was originally going to be called Fear and Loathing in the Financial Markets, because it seemed like everything bad was always happening to me, you know, and I was never on the right side of any big trades, but I was always on, you know, the wrong side of these big fiascos, a tsunami or you know, the World Trade Center or some bad event. And so it was drawing our attention to the fact that you're dealing in an arena that's filled with risk. That's why some people can make the money that they do, because you're constantly being exposed to risk. So you're going to get paid for your ability to manage that risk. All right. But I wanted to point out that, you know, the markets don't work like this little mathematical equation. As you know, if you do modeling, the tails, what they call the standard deviation, these fat tails are much fatter. The risk of these unusual events happening is much greater than we allow for in our model. And so it's going to be your ability as a trader to make that money back, to draw, you know, to pull yourself up by the bootstraps, to make up drawdowns. And here's an ironic statement. If you think about it, as a trader, you are going to be spending the majority of your time in a drawdown or making back losses. Why? Because you can't just make new high every day and then new high the next day and then new high the next day. You might make a new high, but then have 2 to 3 days of chop or a little bit of pullback. It's not like we make new highs in our accounts day after day. So you have to get used to that. You have to get used to the fact that it's really a game of, you know, 3 steps forward, 2 steps back, and having to deal with that.
All right, so your book is still available on your website, right?
Yeah, if the book is there, if the little button isn't working, I just 2 days ago migrated the website to a new hosting company and developer, and I think there were some broken links. So if there's any issue, just give it a day or two and then go back and look at it again. But you can go to the YouTube channel and see a lot of content for free. The book's a funny thing. It's a lot of funny stories. It's a lot of tips and wisdom and, you know, some strategies and things like that. But it wasn't meant to be a manual on technical analysis. It was more a manual on my psychology and how I tried to make back losses and just keep going. You know, I had so many bad things happen to me in my trading career. I mean, nobody would ever believe all the bad things that happened trading wise and in life, you know. And so it's really about how do you pick yourself up from that fall and just keep going. So it's hopefully it'll give you hope in that way.
All right, Linda, thank you so much for your time. I think we've addressed all the questions we've had from the audience, and yeah, we look forward to having you in future. Sorry about the technical hitches. Yeah, we'll iron that out in subsequent interviews. In case you have any presentations as well for future interviews, you can always.
Thank you, Sylvia. And it looks like you have a really great group of people. I think it's a really nice thing you're doing, having this trading community. And hopefully I gave you guys some ideas as to how you can interact, in a good, constructive way with each other, or I think it's great you provide, calls and interviews with other people. That's a good source of inspiration. So I wish you much joy and prosperity for the new year.
All right. Cheers. Bye.
Bye.
Thanks guys for tuning in and sticking with us to the end. We hope you have learned something new. I would like to appreciate Scope Markets for sponsoring this webinar. Remember, you can open a live trading account with Scope Markets and apply the lessons shared by the guest in this webinar to your trading. Many thanks to our guests for speaking to us. We'll be open to have you in the future. Till next time, goodbye.